You say watch jet fuel. Why?
Well, look, Tom. I mean, I think we still have China in lockdown. We have large parts of Asia also in partial lockdown when it comes to international travel, and I think that's going to open up in the next 6 to 12 months. We are down 25% on jet fuel demand globally from pre-COVID levels. We could see a pickup of 500,000 barrels a day, maybe more, just on that front alone. And again, this has been the leading fuel in the last 12 months. I expect it to be the leading fuel in the next 12 months.
How will
it's a
that come
critical
over
fuel.
to Brent crude's price? Can you extrapolate over from the new Pacific Rim demand over to over $100 a barrel Brent?
I'm definitely constructive on Brent right here. We've pulled back after the seasonal driving peak in America. But I think coming into the winter, you're going to have jet fuel demand. You're going to have demand from Europe because of the record high natural gas
Right.
prices you have there. And also remember, we still have a very tight global refining system for a variety of reasons. So all of that, I think, is going to drag us back higher.
I've got 14 themes. I have to go to the social reality that Europe faces. This is not about math. It's not about spreads, crack spreads, and the rest of it. It's about multiple standard deviation moves that become social policy. Tell us how your world can help Europe in this crushing social policy of where prices are, electricity in France, as an example.
Well, Europe faces obviously a very complicated situation. If you look at European natural gas, right? I mean, 40% comes from Russia, or used to come from Russia, and you've lost right around 10% of the entire energy supply of Europe with Russia curtailing that gas. Other things being equal, that would mean a 10% GDP contraction. And what's happening right now essentially is Europe is trying to price itself back into the global economy, so to speak, by attracting liquid gas from Japan, from China, bringing it to the European continent. But also importantly, we're seeing the shutdown of zinc smelters, aluminum smelters,
Right.
steel plants, and fertilizer capacity. So that's all imported again. So essentially, all European energy prices are rising above global prices. But importantly, a lot of the domestic produced energy intensive commodities like steel and what have you are also being displaced out. And that's the way Europe is going to avoid a very, very steep recession and probably end up with just a mild one.
Interesting.
That's essentially the process we're going through.
Kaylee?
Well, Francisco, what I find so ironic about France is nuclear was supposed to help them out, and yet because of the climate issues and the river temperatures, it also is inhibiting their ability to use that power, which brings me to clean energy. There is now moves in the U.S. after the signing of the Inflation Reduction Act in that effort. There's also metrics within that, like a methane tax, for example, for U.S. producers. How is that ultimately going to affect supply of fossil fuels?
Well, one of the hardest parts, right, that we often forget is that the 2020 COVID collapse in demand also brought about a collapse in investment. So 2020 was not just a demand shock, was also a supply shock. We had negative oil prices. We had natural gas in Europe, TTF, at $1 per MMBTU, which is the same gas that's trading at $80 an MMBTU, right? Almost like a cryptocurrency, if you like, and not precisely Bitcoin, one of the more extreme ones. And this is a real commodity that actually people use every day. So I think fossil fuels have a tough future ahead of them because nobody wants to sign long-term coal leases, right? And no financial institution or no major financial institution wants to be financing thermal coal either. It's hard to get financing for conventional oil and gas. Or just shale gas. So I think the issue is going to be in the medium term. We are trying to move very fast into a greener economy because we have these pressures coming from climate, and we've seen them. Right, part of the problem you talked about French nukes. Part of the issue with the French nukes is that we don't have enough water on European rivers, which is a function of glaciers melting fast. Right, so we're starting to get all the compounded effects of climate change across the energy supply system. And I think it's obviously very important to move quick to green fuels, but at the same time we have this gap. And unfortunately, remember, prices are just the balancing item for supply and demand in commodity markets. And we continue to expect very high volatility, continued inflation, and of course a lot of basis risks in terms of differentials, time spreads, and cross commodities across the complex. So I just don't think, I think commodity markets are going to give us the solution, but it's all going to be extreme pricing for a while, and we remain constructive on the complex.
Francesco, I've got 30 seconds left. Can you tell me what you think Europe looks like this winter? Are we going to do a 4-day work week? What's going to happen with the effort to curb consumption?
Europe is going to have to curb consumption by definition. It's, as I mentioned at the very beginning, it's happening already with curtailments of energy supply to industry, but also curtailments of temperatures at home during the summer and during the winter as well, right? So we're going to see forced reductions, potentially rolling brownouts in some parts of Europe, right? I mean, this is what it looks like, and it's almost it's almost like the developed markets are becoming emerging markets, and in a weird kind of way. So.